Hello, everyone. This is Devin Thorpe for the Crowdfund Beat, and we are fortunate to have with us today a special guest. We have with us Sam Hodges, who's the Managing Director of the U.S. business for Funding Circle. Sam, thank you very much for being with us today.
Thank you for having me on the show again.
Well, it seems that you've got some big news with Santander that you'd like to tell us about. Please go ahead and tell us a little bit about what this new relationship means.
Sure thing. So we're very excited to announce earlier this week our partnership with Santander. Santander being one of the largest, most successful global banks. Starting in the UK, Santander is going to be sending us referrals of small business borrowers who need access to credit, and we're really excited about the partnership for a couple different reasons. The first of which, of course, is it'll give us the ability to serve even more small businesses globally. The second of which is, obviously from Santander's perspective, it's an opportunity for them to, in a very values-aligned way, serve a higher share of their customers' needs. And I think the third reason is it really speaks to the fact that what we do as the world's largest and leading marketplace lender for small businesses really is gaining widespread adoption both in Europe and here in the United States, such that even very large financial institutions are viewing us as part of the solution, and are pleased to work with us. So happy, of course, to answer any questions about what we're doing. But again, it's just a partnership we're very pleased to announce.
Well, clearly this is a model for how you might be generating volume in the future here in the U.S., but right now this is predominantly a UK initiative. But what this means, if I understand correctly, is that Santander will be taking clients that are not approved for loan products at the bank and referring them directly to Funding Circle, where they can raise money through a peer-to-peer lending approach. Is that correct?
Let me tweak it a little bit. It's more that borrowers of a certain category that aren't a good match for Santander, just given the size of the loan more than anything else, are coming directly to us. And Santander is supporting the partnership in their branches, they're supporting it online, and they're helping us co-market the relationship across their small business customer base. And then we will be helping those small businesses get access to finance through our marketplace-based approach. You're absolutely correct that the partnership is it's starting in the UK, and we don't yet have it going in the US. That being said, we're actually in active conversations with a number of other banks about doing something similar here in the U.S., and my hope is at some point later this year we'll have more to share on that front as well.
Can you give us some insight into the financial relationship between Santander and Funding Circle? Did they make an investment in Funding Circle, or are you paying them commission on loan originations, a flat marketing fee? Give us some sense of how this might work.
Sure. So there's no cross ownership or no direct investment. It's a very simple referral relationship, and where we're giving them part of the origination fees that we're able to take when we successfully fund loans.
Great. And let's talk a little bit, because not everyone knows, even in the crowdfunding world, exactly what your products are. So walk us through what the Funding Circle offerings are right now.
Sure. So Funding Circle, both in the U.S. and the UK, is focused on delivering fast, fair access to finance to small businesses who are looking to expand. We offer loans in increments in the U.S. of between $25,000 up to $500,000 on terms between 3 and 5 years. It's a very fast process. Typically, a borrower can get funded within a week. And so what we see is a lot of small businesses who have maybe 2 existing locations and they're expanding to their 3rd, or a business that is going really well but wants to upgrade some part of their equipment or refurbish one of their locations. And existing financial service providers have a hard time serving that need for a variety of structural reasons, and we figure out a way to get those folks access to capital in a very efficient manner.
And this is not startup finance as a general rule, right? This is small business finance for going concerns, typically profitable, I would imagine.
That's correct. We typically are dealing with borrowers who are at least a couple of years in existence. typically have real revenue and are generating cash flow and are really just looking for that chunk of capital to take the business to the next level.
Give us a sense of the pricing that you're making available to your borrowers.
Yeah, so our pricing is meant to be fair and to allow the small business owner to make a strong economic return on however they use the funds. So our interest rates range from high single digits all the way up to about 20%. It really just depends on use of funds, risk, and term.
So this ends up being much cheaper than most equity sources, much cheaper than most factoring sources, or invoice financing. That's
correct.
Those things are quite a bit more expensive, right?
That's correct. So if you look at the other kind of online alternative lenders out there, the vast majority of them are extremely expensive. So merchant cash advance, for example, typical APRs, if you do the math, are 60% plus, oftentimes well in excess of 100% annualized. That is extremely expensive money, and it's not a particularly good match for most uses of funds within a small business. If you're taking money out at 80%, it's hard to generate enough return on however you're using the money to actually do well on that. And so what we've been able to build and what we offer to small businesses, again, is that really fairly priced capital in larger increments that actually matches the use of funds.
What are typical uses of funds? Let's talk a little bit more about that. You gave us a couple of examples, but let's drill down a little bit.
Sure thing. So most typical example would be, again, a going concern where they want to expand. And so, average loan that we funded is $150,000 in the U.S. Typically, that's going to be a mix of equipment purchases, some build-up in working capital, and some general purpose funds for things like building out an existing location or opening a new location. In certain instances, we'll help a small business actually buy an additional location. In certain instances, and actually we get the request a lot, to finance specific pieces of equipment. And we're happy to do all of the above.
What, as you look at the underwriting criteria, we've talked a little bit about the cash flow side, a little bit about profitability, but what about on the balance sheet side? Are you requiring people to have traditional bank levels of collateral far in excess of the loan amount, or have you got some flexibility on that side?
Our underwriting standards are flexible and they're holistic. We don't use an exclusion-based checklist, which is how a lot of banks and frankly how a lot of specialty finance companies operate. They go through and say, well, do you have above this? Do you have above this? Do you have above this? Does your loan look exactly like this? It's very narrow. And from our perspective, we obviously are seeking, small business owners who are able and willing to pay us back, and who will pay us back, right? Because otherwise the model doesn't work, of course. But the way we think about credit is broader. And so, for example, if someone has extremely strong asset coverage, that may make up for a deficiency in cash flow coverage, and vice versa. We do have, minimums that move around depending on the type of business. But typically we can try to underwrite to where a small business is in its lifetime and make sure the capital is priced fairly given those different factors.
Fantastic. Well, Sam, this sounds like an important milestone in the business. As you look at things here in the U.S., you mentioned that you're in discussions with partners like Santander. Are you expecting to be able to announce something like this in the near future for the U.S. market?
How about this? We'll tell you more when we can. I don't want to speak too soon on it. Probably not in the near future, because these relationships, you need to make sure they're structured carefully, and you need to make sure you really have the right partner. And so we'll be sure to come back on the show when we're ready to announce something.
Great. Well, listen, tell people now, how do people who want to borrow money connect and apply? Give us a sense of the process, beginning, of course, with the URL. Where do we go? We are at fundingcircle.com.
So easy to find.
Good.
When you come to fundingcircle.com, the first thing that a visitor to the site sees is the basic information on how the process works and a button that says apply for a loan. So for a small business owner who is looking for access to capital, they can very quickly come in. We have some basic eligibility criteria which should take them no more than a minute or so. And then after that, people go into our detailed loan application. End to end, the process shouldn't take more than 20 minutes to apply, and we can make a decision within typically 24 hours, at most up to about 48 hours, and we can fund within a week.
Fantastic. Well, Sam, this sounds like a great program for small business owners and an exciting time for the Funding Circle. So congratulations.
Thanks, Devin, and appreciate you having us on the show.
All right, thank you again. Let's do some good.